Let's take a look at Euro Aussie. Now, we've been talking about this one for quite some time actually, and looking for opportunities to buy ever since the break of this downward trend line, which we saw in just after Easter this year. And we've seen the big surge to the upside after the break of this downward trend line, which lasted from round about this time last year. Sorry, 2 years ago, my apologies. And obviously Easter this year, and we've seen this is typically what happens after a trend line is broken. This huge surge, if it's a downward trend line, a huge surge to the upside, and what we're looking for is that retracement. Now, the great thing about what's happening now is the fact that we do have that retracement finally. We've only had to wait an eternity for it, but we've got it. And if we take our Fibonacci from the low point, the most recent low point, to the high point, we can see that it's a 50 retracement, 50% retracement. I'm not going to say 50 is a Fibonacci level because it really is not. So it's a psychological number, and 50 is a very good number in terms of a retracement. So another thing I want to bring your attention to as well is the fact that this retracement is actually an ABCD pattern. Now, ABCD patterns are harmonic in structure, and when we have points A to B, let's just go through this again, A, B, C, D. When points A to B have symmetry between points C to D, then that's a very good sign. And one thing which is evident, as I'm sure you're seeing from now, is the fact that not only do we have a horizontal level, the 50% level here, retracement level, but the fact that we've got the A, B, C, D, also known as a thunderbolt, by the way, because it is shaped like a thunderbolt. You can see that more acutely when we do that. Then we can see that we've actually got a decent entry point on the weekly time frame. 2 weeks ago it closed as a bullish pin bar reversal. Remember that we do have a confluence of reasons. We've got this horizontal level, we've had the 50% retracement, and we've got bullish pin bar reversal followed by an inside bar as of 2 weeks ago. So if we are going to simply trade this one for a buy, a potential buy for an extension, bearing in mind this ABCD pattern could merely be a bull flag, and if we are entering above the high of 2 weeks ago at this point here, the bullish pin bar reversal, with our stop loss either below the low of 2 weeks ago, or if you wanted to be aggressive, below last week's low, then that's a very good entry. That's what a lot of people will be doing actually, and that is a valid entry into this position for a medium long-term trade. Please bear in mind that Euro Aussie is, from a fundamental perspective, having a bit of a contest as to who has the worst August. If we look at the Australian dollar, for the past 20 years, we can see that the Australian dollar has had a pretty terrible August moving through into September. So that's a good sign if we're going long on the euro against the Australian dollar. But obviously, if we go to our friend's equity clock again and look to see how the euro has historically featured, then we can see that, okay, it's had a pretty bad August, but not as bad as the Australian dollar. So it's a choice between the devil and the deep blue sea when looking at these two different currencies. But when paired together, it looks like the euro could potentially be the stronger one based on 20 years average of how they've both performed, and obviously this bullish harmonic pattern here. Okay, so if, as and when you decide to take this trade, in terms of management, if you have your entry above the point of, say, 2 weeks ago at this point, and either stop loss below last week's low for an increased reward to risk, but also an increased risk, stop loss below the setup bar, then what you can do is, if it triggers long, then as soon as you get to a 1-to-1, then what you can do is you can scale out half the position, either move your stop loss to break even or leave it open for a no loss, worst comes to worst. Or you can trade it for every second buyer bar below the low of every second buyer bar. Okay, so just to recap, if, as and when you get triggered into this trade, if you do take it, you can either scale out half the position if, as and when you make, say, a 1-to-1 profit on it. You can move your stop loss to break even, or you can just leave it after scaling out half. If you did decide to move your stop loss to break even, it will mean that there's more chance of you being stopped out, but at a small profit. You will remove yourself from the flow of opportunity if the market does go up even further. But if you leave your stop loss at the original place after scaling out, then the worst possible thing that can happen is an overall break-even outcome. Okay, so that is the euro against the Australian dollar. That's quite a good looking bullish harmonic pattern if there ever was one.